Hello, hello, and welcome to this week's Profit Maximizer Moment. This show is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Belisle. I'm also the founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS. I do that with our profit coaching programs and our tax planning system, which has saved my clients over $6.8 million over the last 5 years. As I say every week, all legally. I love my clients, but I don't wish to go to jail with them. In today's video, it's going to be a little bit different. A lot of numbers. Don't get buried by that unless you're an accountant. You can look at the numbers. Just kind of follow along so you get the facts and understand what we're doing. But today we're going to learn really what is the secret key to increasing profits. All right. It's not what you think it is. All right. But first, support for today's show was brought to you by Profit Maximizing Publisher, which helped publish this book. I got another one coming shortly. But this is the 90-day profit reset. All right, which shows you how to gain your independence from reduced cash flow, shrinking margins, and an evaporating customer base. In this book, you will find chapter after chapter and idea after idea about how you can turn around your business, reset your profits from red to black in 90 days or fewer. Even entrepreneurs who are making money will benefit from my book by learning how to make even more money. All right, like I said, we're going to be putting a real life example up here, okay, of how you can actually increase profits, but how you can get yourself in trouble. I'll say, because one of the most common complaints I hear from business owners pretty much every day, but when things are going, what did I do? That's what happens when you lean on the keyboard. Anything can happen, um, especially when things are a little crazy. All right. One of the things that I forget who said this quote. I think it was a Microsoft exec, but I could be wrong. So during tumultuous times, bad companies go out of business, good companies survive, and great companies improve. All right. That's what we're going to be doing starting this summer. We're going to start our coaching and getting stronger. I do not know what's going on, so let's see what's happening here. There we go. I don't know if our internet connection's a little weak, it looks like. Not sure why. But, that's what we're looking at. We're looking at every company improving and making it a great company. But I hear I'm working harder, making less. When I question what's going on, they often tell me they've increased their sales, but are still making less money. I don't even have to look at their books or even ask that many questions. I know what the problem is. Their gross profit margins are dropping, and that's particularly true today with inflation going higher, diesel fuel higher, everything's higher. All right. If you're not doing what you need to do and you're not really looking at your books very strong, you're going to have a situation where you're selling more, making less. All right. Every business, no matter the industry, has a gross profit. Let's make sure we all understand what that is. Gross profit is your sales price less your total costs of producing and delivering your product or service. All right. So make sure we understand that. Sad thing is that only a few business owners understand how important managing this number is in order to make a profit. Even fewer know what to do to improve for their gross profit margins. Look, in the book, like I said, I have an index in here that has 54 tips on how to do 54, 52, whatever it is, that I use as my coaching checklist, which I go through and I say, all right, what can I do to help this business owner that I'm coaching improve their profits? And I actually have given you that. Now, I'm going to give you a real life example of something I ran across. And like I said, a lot of numbers. Going to go through it too fast. If you're an accountant, you can pause it and look at it, or a bookkeeper, or you really want to understand it and study it. But what I'm going to do is I'm going to go through it pretty fast, not take as long as I do during my coaching sessions, but basically to get the main points across. So let me share my screen and share screen. Let's get the right one on. Select a window. Let's get screen one and let's see what that is. There you go. Bingo. All right. Okay. And this isn't bad. Yeah, print quality is not the greatest. I probably should redo it and get the print better, but you can still see it. This was a commercial glass company that came to me. As you can see, they came to me like in July or August when they got their second quarter financial statement. And what the guy was showing me was they had sales in the first quarter of $853,000, but in the second quarter, $1,040,000. So they increased sales by $187,600. But look what happened. They went from having a $79,000 profit to a $51,000 profit loss. $131,000 swing. And he's like, what happened? All right. Well, a couple of things got my attention. For example, payroll expenses went from 30%, 259,000, to 41% of sales, 434,000. That's pretty dramatic. So what did I have to do? Well, let's look at what we did to figure out what was going on. First thing we did is we did an analysis of payroll. And so we saw the owner, no big deal. He wasn't overpaying himself. The office salary was minimal. It was a part-time girl. But his installers had increased by 95% and commissions had increased by 48%, which when you did that, payroll taxes also increased by 67%. So that's where the $175,000 payroll came from. So we got to dig a little further. So I did some things a little different. For starters, we restated his income statement to move into cost of goods sold, the installers, and the commission. So now I could see what was happening is before in the first quarter, he was making 24, almost 25%. In the second quarter, he was only making 7, almost 8%. All right. His fixed expenses stayed relatively fixed. So they went down as a percentage because they only decreased by like $800. And he sold more, so that went down. It's what you would expect. So now it's like, okay, what's going on? So we started looking at his top 10 selling products, doing the 80-20 analysis. Most of his sales, if you look at, 81% of the sales were in these top 10 products. So we did some simple analysis. Let's look at the units sold, the product number. I changed that just to get rid of it, the sales price, the total sales. And what I could see is the units sold. We could see that unit 103 sold 720 more units, 1,095 to 375, at a sales price that was 22. It was down because what they did, I found out, is that they put it on a 10% off. Kind of interesting. So instead of selling it for 220, they were selling it for 198. But what we also saw was this product here, 108, had dropped 125. All right. So what we found out is this was a new product. When I asked more questions, it was a new product that was that when they sold it, it was a better quality and everything, but it also tended to cannibalize from this product 108. Okay, why does that matter? Well, let's look at it a little more. Let's do some numbers. We got into product 103, saw first quarter sales of 82,500, 216. Then we saw payroll. Well, see, what was happening is that this particular product at the time, this was back probably in the late 90s. I can't remember exactly when, 90s, early 2000s, who knows. It was more labor intensive. So it took a lot of effort to put it in. You can see down here, hours to install 7. Newer employees took a little longer. Average cost per dollar required overtime and new costlier employees. Okay. So what we found out was the total labor cost went from 41,000 to 207,000 because he didn't have it broken down, but we used his numbers for how long it took. Okay. Now we look at this. He basically, when we did this with labor, because he didn't have labor in it, he just looked at what it cost him and said, oh, I'm in doubling the price, so I'm making money. But when we looked at labor, he was losing money in the first quarter on this product at the 220 price because it was actually costing him more to install it. So he put it on sale, sold more of it, and lost more. Kind of tells you, not a good idea. If you don't know your numbers, you got to be very careful that you don't put something on sale that you're actually going to lose money on. All right. Now we looked at the other product, which was product number 108. He kept the same, but you notice he lost 122% decrease in sales because he cannibalized it with the product he had on sale. This particular one, he made 31%. Sorry, 31% as opposed to 30. But why? Because they knew how to do this product. It took them an hour and a quarter to put it in. It was an easy install, no time. Total labor was $10,000. Total labor here was $8,100. All right. In truth, if I were to dig into this more, because they had to take their better installers on the other one, I bet you they actually made less on this one because the newer people he was putting here were probably taking twice as long. But we left it alone to be conservative. So when I sat down and met with them, this was our prescription on, how to solve the problem. 1, redesign your chart of accounts so that your cost of goods sold reflects labor. Calculate gross profit for all your products and or customers, at least your top selling products. Avoid discounts. Compete by increasing the perceived value to your customer. All of these items I've discussed in another video and we'll discuss moving forward. Raise the amount of each sale by upselling, bundling, and cross-selling. Tie commissions to gross profits, not selling. That was what was interesting in this product. Okay. Not only did he increase the number of units sold, but he also increased the commission. So he was losing more, and he was selling more, losing more on every sale. That's not really a good way to make money. All right, number 6, if you put something on sale, be sure to consider what other products are being cannibalized. Number 7, promote products with the higher gross profit. Always look, you probably should put a sale on for the old product. All right. Eliminate your low gross profit products, or at least raise your price and educate to justify the increase. Before he sold that new product, he had to get the price up where it made sense. I mean, it did a good job in El Paso with the high UV. It probably could have sold for more. He was just taking his normal percentage, and if I buy it for $1, I'll sell it for $2. Well, he wasn't selling based on perceived value, which is a problem. So, you raise your price, educate to justify the increase, or you just don't sell that one. Cut labor costs by creating systems and increasing efficiencies. All right, so he did that. When we come back well, this is interesting. Hold on a second. Let me flip this. I need to go counterclockwise, I believe. All right, so we came back in the fourth quarter, and we saw what he did. Fourth quarter sales were down a little bit, 980,000. His gross profit was up to 27%. Okay, installers, commissions, payroll taxes. But you look what happened. All of a sudden, he went back to making a profit, $140,000 as opposed to the $131,000 loss in the second quarter, a $271,000 increase in profits. That's, sorry, my hand rested on that. Here we go. That's important because what we're talking about is very simply, the gross profit is what matters, not sales. And if you don't know what you're doing, you can run yourself into a lot of problems. So homework for yourself, that's kind of weird. Sorry about that. Let's get that back. Is take a look at this page and I'm sorry, let me switch it back. PDF files. There we go. Oh, counterclockwise dummy. All right, we'll do this again and again. I apologize. Sorry about that. That's me not knowing what clockwise and counterclockwise is. All right. Homework. Take a look at this prescription. Make sure you follow it for yourself. Make sure your chart of accounts, that your accounting records give you a financial statement that has real cost of goods sold. Calculate your gross profit for your top items, and then follow the rest of this to raise your cost. Get the book. It's really, I think I got it on the Kindle for next to nothing, $2-3. And heck, I think you can get the paperback for less than $20 now. I think it's cheap. But I have that checklist in the back. Use that. Pay attention. We're going to be doing some coaching starting in August or September. That's going to be a group coaching, but a lot of this stuff's we're going to go into in more detail. Let me see if I can stop sharing the screen. There we are. Hey, until next time, until next week. This is Wayne Blau saying, let's make this our most profitable year ever. Thank you very much.